All right, good morning, everybody. I'm having computer difficulties today, which is why we were just slightly late. I may have to turn off my video for momentarily while we're doing this, but everything else should be fine. So welcome to the DecisionPoint Trading Room. My name is Erin Swenlin with DecisionPoint.com, and I am here with my father, Carl Swenlin, and we're going to get you all started for the week. We're going to look at what's going on in the market. We will focus in on the sectors and possibly a few industry groups, and then we will be taking your simple requests. You can send the simple requests in using the Q&A box, and you can use the chat box to talk amongst yourselves. Just make sure that when you leave a comment that you use the drop-down menu above the comment to send it to everyone. And we are not registered investment advisors, so all trading decisions are your own. Anything that you hear in this trading room, read in our blog, should not be considered a call to action. All right, I think we're ready to start, Dad. Go ahead and take the screen. I'm going to turn my video off for now while I try and figure this out.
Before I look at the market, I wanted to talk about Watershed Events. I think there's been a Watershed event in cryptos, but let me get back to that. Make sure I get back to that, Erin.
I will.
But I want to show what I mean by the Watershed event by looking at the long-term gold chart. First of all, you go back to the 60s. We were still paying $35 an ounce for gold, and then Nixon opened the gold window and things started taking off. It had a very rapid increase, parabolic, as we talk about a lot, and went up to about $880 an ounce. And that was it for 20 years. And just let me skip ahead and notice there's parabolic here and here and here. These are kind of short, but when you see them, you expect to pull back out of them. That's just it. And you see these, you can see these on weekly and daily charts, but the monthly chart is the one that basically gives the best picture for a long-term parabolic. So what we had after that, it trudged along for 20 years. And then here's the Watershed event. Homestake Mines, the largest, deepest mine in North America, closed, and the company was purchased by Barrick. The closing of the namesake mine for Homestake was the Watershed event. I should say, in the year 2000, I was Gold Timer of the Year with Timer Digest. And of course, at that point, you see everything was depressed in the gold market. And my late friend, Nick Profit, said, yeah, that's great, Carl, but nobody gives a darn. So we're moving along here. Before I leave this chart, I wanted to show the correlation with the dollar. Gold is negatively correlated with the dollar, but you notice that, okay, it spends most of its time below the zero line, which is the negative correlation, but occasionally it does get up above. And a reading of a minus 1.0 is exactly negatively correlated, opposite of the dollar, and the 1.0 would be exactly correlated with the dollar. Notice it never gets that high. So I'm going to go to Bitcoin, talk about the Watershed event for cryptos. I just heard recently that Fidelity now has a setup where you can trade cryptos. They have brought trading the cryptos to the common man. And when this all started back here, when crypto was way low, And when it first started, I don't think I would have known how to trade crypto. I never had any interest in doing it. But you have to go to I believe you have to go to a crypto exchange. But anyway, but now we have got it set up to where everybody can trade it with an account at Fidelity, and I'm sure that there are other places that you can do it. It's much easier now after all the excitement has gone on. So that's my watershed event discussion. Moving on to the stock market, I wanted to look at some of our indicators. We don't look at the advanced decline line very often because it's really a rudimentary as you get with technical indicators, but it's just simply the number of advances minus declines for each day. And the cumulative index shows you the bias, which way the market is tending internally. Notice that we had negative divergences with breadth. This is the advanced decline volume indicator here, and this is this started out quite a ways back for a negative divergence. New highs and new lows. Not much going on there that's of note. There's New York Stock Exchange, and you notice we did get negative divergences across these tops here as price was going higher. The new highs were not quite making it above this one. Let's look at our bias assessment. This is here we have this Silver Cross index, which is at that's 80%. That means 80% of the stocks in the S&P 500 are. Erin sent me a message. She'll be back momentarily. Okay. Silver Cross index is the percentage of stocks in the S&P 500 that have the 20 EMA above the 50 EMA. That is considered an intermediate term buy signal in our discipline anyway. And then the Golden Cross index is at 49, and Golden Cross index is the percentage of stocks within the index that have the 50 EMA above the 200 EMA. Now we have the Gold and Silver Cross indexes on 20 other indexes and market indexes and sector indexes. But we'll concentrate on the S&P 500 now. Okay, here's the S&P 500. Silver Cross at 80, but they're only only have 48% of stocks that have a 20 that have their price above the 20 EMA, and only 68% with a price above the 50 EMA. So there's no way that this can get better. It can only get worse as long as this situation exists. It's going to be pulling those EMAs closer together until the 20 finally crosses over the 50. Looking at the 200 EMA, I've got, let's see, we've got 58% with stocks above the 200 EMA. Now the Golden Cross index is at 49. So we could possibly see some improvement on the Golden Cross, but not likely, because we've got only 57% are above the 200 EMA. So there's not any way we can improve on this number unless this number improves down here. You're back, Erin?
I am back. Hopefully you can
Okay.
hear me.
You need to turn up the volume somewhat. You're low talking.
Okay.
Okay, now let's move to the Our two primary indicators, the Swenlin trading oscillator for breadth and volume, these are short-term indicators, and we noticed that they started diverging negatively well above this top, and it started at this, off of this peak, it started going down before price top. So we're in the midst of a decline. It's hard to say what's going to happen, but it's kind of, unless the market turns lower, if the market turns lower, I would expect these to get deeper negative readings. So it is getting in the oversold area, but not heavily, not deeply so. The intermediate term breadth momentum and volume momentum indicators, notice that they started declining as price topped. So that's still heading lower, and they're above the zero line. We would expect them to go down to this low, for at least that low, to get to where we would consider them to be oversold. So looking at this, we have to say that most likely prices are going to continue lower, regardless of intermediate, or I'm sorry, short-term bounces. Okay, let's look at that SPY. We've got, well, we're in a wait and see mode right now. We're waiting for the Fed speak on Wednesday. So I don't expect much to happen in terms of price change. Notice how we're getting more fearful. That was quite a drop. Look at that, Erin.
Oh my goodness.
Moved from it's pushing on the lower Bollinger Band. We use an inverted scale and log scale, so we can keep a little better track of what's going on with the VIX. Okay, let's move along to the dollar index. Again, wait and see mode, but it is in decline, which has been beneficial to gold. Gold has broken this rising bottoms line. I'm not real happy with this rising wedge, because I feel like I need to draw it off that low right there. But I think intuitively, I think it probably belongs up here. I can't get a hold of the right thing. I think it needs to be coming off of this angle right now.
Mm-hmm.
So
I agree.
yeah, so I think that it's still in that wedge. It's what I would say. It hasn't broken down yet. The falling wedge is most likely to break downward, but
The rising wedge.
Thank you. Rising wedge is most likely to break downward, and it's just because the steepest line is the weakest line. Crude oil, messing around here. This is a range for almost a year, and let's just take a little further out. Let's look at least a 1-year chart. Okay, nice rounded top. You have to say this is probably going lower because of that rounded top. But on the other hand, with a technician, we have two hands, and there's a double bottom here. So that might allow crude to pull out of its decline. Bonds, I noticed on Friday that we basically have a parabolic advance. This is not as serious as the ones you saw in the gold chart earlier, because it's on a daily chart, and the implications are on a short-term basis. it will at least correct downward and set a little less steep rising trend line. On that note, though, I think personal opinion is the bonds are really overdone, or I should say yields, the decline in yields is really overdone. And in fact, let me look at the yield chart. Notice we have a short pullback here, longer here, and this is the deepest so far. But I still think the next move, major or say visible move, will be a move to the upside in yields, and that would mean bonds are going lower. Here we have the 10-year Treasury yield, and well, it's up for today, but again, sitting around waiting for the Fed on Wednesday. We can do Bitcoin. I think if you're looking at Bitcoin, this is probably the best chart. A long-term chart is probably best. You've got that major top here, and I think it's going to continue lower. Bitcoin and cryptos. Certainly, this would be my target right around here, which is, I don't know, probably 3,000 for that. I don't know if it'll ever go to zero, but right now I think people who bought above where it is now, and that's a lot of people, they're thinking of whether they should just wait for it to go to zero and hope it'll recover, or maybe they can just take their loss on their. So we have end of year coming up, so good time to be taking some losses on your taxes.
There you go.
I'm looking for utilities sector. I have that one up. It's ready to have a 50 cross up through the 200 EMA, and that's a golden cross, of course. And so that's what we're waiting. It's not so far above those moving averages to where it may take to the end of the week if it stays above if it doesn't decline back towards them. The 20 above the 50 moves a lot faster, but I would say the 20, the 50, and the 200 is more of a glacial pace. And looking at our big tech stocks, I was saying on Barney today that if you had bought Apple 40 years ago, $10,000 worth of Apple 40 years ago would be worth over 14 million today.
I wish I'd thought about that.
Yeah, I know. But I'll tell you what, 10,000 was a lot of money back in the day. Now
That's a good point.
Now it's not so much, but back 40 years ago, it was probably, you're looking at probably the feel of 40,000 today. I have the inflation little app. I have to check that. But yeah, it was been hard to put that much money into Apple. Would have been hard for me.
Yeah.
Okay, we've done that. And I need to do the rest of these. Amazon, not looking very good at this point. It's down over, well, let's just say 55% from its all-time high, and it still hasn't recovered. Google also not, I mean, this is a nice rally right here, but it's still in the big picture. Normally I look at a one-year chart, but I want to keep these all-time highs in view, so I stretched out to a year-and-a-half chart. Meta, Facebook, very nice rally from here to here, but still looking like a long-term downtrend. Microsoft still looking perky. coming off its low. It's down almost 40% from its all-time high, and is recovering nicely at this point. Netflix again doing well, but still it's going to take quite a bit to get back up here to these all-time highs. And finally, NVIDIA in the recovery mode. Tesla, not a big tech stock, but it's still, we always look at it, and it's doing well. I mean, it's not doing well at all. And there was a comment made on Marnie today that more people don't like Tesla than like it, or something along those lines, which is a major change. And I wonder why that is. Just in case you don't follow the news, yeah, it's probably because there's a lot of people upset about what's going on with Twitter. So I'm sure that his unpopularity from the group that finds him unpopular there is also the same group that used to like Tesla, and it's into the electric car mode. Okay, I think I can turn it over to you now.
All right. Before you lose that screen, we did get a question in about gold, and it's about the monthly chart. So I'll let you get that up there. It says, Jim asks, based on the monthly chart of gold that you showed earlier, did gold officially hit a double top with the August 2020, March 2022? And how does that influence your assessment of the near and intermediate term future for gold? And then Linda said, I'd like to hear this discussion as well. So,
okay, yes, we definitely have a double top here, no question about it. But in the bigger picture, we have a cup with a handle here. This handle is getting a little tedious, but right now, this is an area of support which it broke down, but it's back above it. So I'm still thinking gold is in decent shape at this point. And let me just put a thumbnail onto this chart. Okay, it's PMO, monthly PMO is still falling, but it's really wanting to turn up. So assuming that happens, I think we'll be in good shape. But right now, we're waiting for this cup with handle to resolve, which we normally expect that to go higher, but it doesn't always happen that way. Did I answer the question fully?
yeah, I think that you did. I mean, for me, I see that double top in effect, but I also see this bounce as maybe starting to make the pattern less likely to, go down to what you would normally expect. I mean, we got the breakdown and it was kind of a fake out, and now it's starting to head back up. Of course, I don't see it moving, too much more than the top of that trading range, but I think near term, it doesn't look too bad, because even though we have that double top, it looks like the pattern might be disintegrating a little bit.
Right. And it's a double top, but the confirmation line, the confirmation line was penetrated and it's been recovered. So I think that double top mechanism is neutral at this point.
Mm-hmm.
Let's take a look at the weekly chart. All right. Rising trend line penetrated and recovered. So I think that we've got a rising PMO, weekly PMO. So I could be happier, but I'm happy with it at this point.
Mm-hmm. All right. I think that pretty much did that. There was kind of an overall general question, which was about oil. And, I know neither of us are, experts on the oil business or anything, But they're confused, and I understand Mike is confused. He says China is lifting COVID restrictions, and you would think that would begin to give oil a boost soon. And, with the maybe lack of supply. So what are our thoughts? With China lifting COVID restrictions, maybe we're going to get more oil. Personally, I can't really make a statement one way or the other, but it's been failing, and we've had kind of a tightened supply over time. I don't know. What are your thoughts?
Well, the world is not suffering from a glut of oil. And as the winter approaches in Europe, they're going to be in dire straits. I look at the chart, and that the chart is the boss. And right now it's showing the top. Let me go to a weekly chart for oil. And it's it's broken below this long-term rising trend line. That's not a happy event. Let me just try something out here. See just how. Yeah. Okay. If you draw it across the October 2020 low, you got that. But I tightened it up here. It's right now, it's not decisive. Okay. That's not a decisive break. But
and when we say decisive, that means a 3% or more move.
Right. And I don't think that doesn't look decisive to me. But again, let's put the thumbnail up there and see if that PMO is doing anything attractive. No.
No.
So right now, oil's in a ditch. I don't know. It's not rational based on what I know, but the chart knows more than I do. And
there you go. All right. Bien says, when the dollar goes up, won't gold go down? And I would say, Bien, that yes, that's the underlying the way gold and the dollar work, but it doesn't mean that they can't go up together or go down together. It's just a matter of the regular correlation is going to be opposite. If the dollar goes up goes up 1%, gold should go down 1%, but that doesn't always happen. So we always look at the bias and where that's going. Okay,
well, look, here, the monthly chart going all the way back to 1970. It's generally speaking negatively correlated because it stays mostly below this zero line on the correlation chart. But obviously it's not always. It just can't count on anything.
No.
So you just have to be alert and pay attention and do the best you can.
Right. Let's see. And we've talked about this before, David, but he says perhaps people who saw crypto asset classes will switch to gold is the question. And, we've been speculating about that for a while.
Right. That's something that's just a wild guess on my part, that the reason gold isn't doing better under the circumstances is that people are spending, they're putting their money into cryptos because it's the next big thing. But that idea is definitely with the watershed event of FTX failure and people losing so much money on that. I think the idea that crypto's the next big thing is losing favor.
I must agree. Okay, I think it's time for me to share the screen. Kept you busy this morning.
Yes.
Okay. Well, we love it when we get those questions. So if we don't get to them, or if you think of a question during the week, you can email it in. That will help us as well with getting the right questions answered. But of course, bring them to the room and we're more than happy to answer them there. All right. Well, I'm going to start us with a walk through the sectors. So let's go over here and look at them all on a candle glance. That'll give us a better feel. There we go. So one of the things that I was commenting on last week, and to diamonds in the diamond mine, and gosh, I feel like I talked about it a lot of different places, your daily five, I don't remember all of them, but the main thing is that every single one of these sectors really has the PMO moving lower. Now, I take that back a little bit because I did notice when we went through the XLU chart, you had that up and the PMO is turning up above its signal line. And it looks like XLK might be making the turn as well. So we'll take a close look at those two in particular. But overall, you can see lots of overbought PMOs, and they are all headed lower, with the exception really of XLY, which topped beneath the zero line. It's still moving lower, but it wasn't as much of a overbought decline, if you will. But that's even more negative, the fact that it could not get up to the zero line and past it before it turned down for a second time. So not looking good there for discretionary at all. So let me go in and I'm going to look at these two in particular, but they'll go at the end. But
Wait a second, Erin.
Yes.
Could you go back to that?
Yes.
Okay. I want you to notice that if that all the PMOs have topped or are on about to top. There's one that looks like it maybe hasn't, the utilities, but the rest of them have topped.
Yes.
And that's overall, that's bad.
Yes, most definitely. Most definitely. If we couldn't impart anything to you today, the market is weak. And given the way these sectors look with the momentum, it's probably going to be getting weaker. I know there's speculation about the Fed. Did we talk a little bit about that at the beginning? I don't know.
I'm sorry, the Fed?
Yes.
Yeah, I did mention that we're waiting for the Fed's announcement on Wednesday.
Yes, I'm thinking that it will be the 0.5% everybody is hoping for. But man, if they come in at 3/4, it'll be basis points. That'll be really interesting. See what the market does with that.
Right.
All right. So let's just pop through these really quickly. Mainly, what I'd like you to look at are these PMOs that are topping or giving us those crossover sell signals, but then also just looking at the amount of participation, the amount of stocks above their 20, 50, and 200. And you can see a lot of damage being done. And even though we have these little rallies like we did on Friday, it didn't really make a huge improvement on the participation under the surface. So keeping an eye on that closely. And then the other part is that you have a lot of these sectors really moving sideways. So maybe they're doing better, but they're really not going anywhere. This is definitely the weakest sector, discretionary. We have that sell signal coming in below the zero line, as I mentioned earlier. And you can see kind of mixed as far as participation goes. But mainly, this is the big problem, that silver cross index crossing below its signal line. That definitely tells you that the bear is roaring in the discretionary sector. Here's the opposite, right? This is your more defensive sector, the consumer staples, on the other hand, but they still look very, very toppy. This looks very head and shoulders like, and you have that topping over bought PMO with a brand new sell signal. You've had some pretty good participation, but you can see it's beginning to trail off. Feel free to stop me at any time. Now, energy, what I've found really interesting is that if we were to overlay the oil chart on here, it wouldn't be doing exactly what you would have thought. Right here, we had this huge rally in energy, and really oil was not enjoying the same sort of rally. So this really got overbought, this sector, which is why I'm so negative on this sector. We had the big rounded top, but we just had this outperformance for oil in the energy sector. And now oil is starting to look soft again. And, now that we were overbought here in this sector, it's headed lower. We did get a rebound going on today, but not above overhead resistance. And you can see the participation is pretty much zero right now.
You noticed on the Silver Cross and Golden Cross indexes, notice the first half of the year shown, they're on the to the left. Notice how they were at 100% or thereabouts for a very long time. Those scales, that's a finite scale. You get to 100, you can't go any higher. You get to 0, can't go any lower. So even if it gets up there, we'd consider it overbought, but it doesn't mean it's going to necessarily reverse.
All right, excellent points. And, that's the thing. If your sector is doing well and everything's overbought, it doesn't mean that it won't do well moving forward, because those overbought conditions can really persist. And I think earlier in the year, as far as energy, that's pretty clear. Financials on the way down broke the rising trend. We're seeing a really nice bounce right now on the 50 and 200-day EMAs, had a golden cross of that 50 and 200. But I wouldn't say this sector is doing well by any stretch of the imagination. We're losing the price above the 20. So all these stocks are losing the 20-day as support, and they're starting to lose the 50-day as support. Stochastic's trying to make the turn, but still really oversold and not anything I would be trusting right now. Healthcare has really been one of the only strong sectors of late. That was last week's sector to watch for DecisionPoint diamonds. We've been paying a lot of attention to healthcare. It's been doing fairly well, but we do have a rising wedge. It's not actually annotated here, but I know that we do have one. And you can see the PMO again topping in overbought territory. The Silver Cross is still looking healthy though. And participation, although it is starting to trail off, there's still a lot of strength underneath the surface. Still, it wouldn't be something I'd be betting on, if you will. Industrials also looking a little bit sad here with that rounded top, similar to energy. Obviously, it had already started to fail because we had that PMO sell signal. And then look at the participation just trailing off quickly. And now the damage is starting to be done to the 50-day EMAs. Stochastics are really still in decline. So not looking too good there. Materials also looking very toppy. PMO sell signals we talked about earlier. Look at stochastics just really falling out of the sky now. So there is internal weakness all over the place on the materials chart. Real estate was starting to perk up just a little bit, but really at this point, it's just clinging to support. And you do have that PMO sell signal that looks like we might get today or tomorrow. Stochastics trying to pause and move reverse, but not actually doing so. I don't see a lot of goodness on this chart either for real estate, despite those mortgage rates moving lower. Technology. So this is the one that looked like maybe the PMO was recovering, but you can see as we look at this a little more closely that yes, it's decelerating, but we're still on the sell signal. And technically the PMO is still in decline. Look at the Silver Cross Index getting a negative crossover on its signal line. That's a clear bearish signal here for technology. Stochastics turning up, so maybe there's a little bit of hope there. And you can see a little bit of relative strength that sort of appeared at the end of last week. But overall, again, looking at that participation failing and that Silver Cross Index crossing below the signal line, that's really not a place you want to be putting your money either. Rising wedge here on utilities, but as we noted earlier, PMO actually bottoming above its signal line. So, I mean, if there are any sectors out there that look even halfway decent, this would be the one. But again, you know, we do have the nice participation going on, but the flattening of the Silver Cross Index, the possibility of it turning back down does make us a little bit nervous here, but you can see outperformance on this sector. So really, if there's a sector that, you know, if you have to be in the market, this seems like a sector that might be okay for you going into this week. Given that is the case, I'm going to just look really quickly at a few of those industry groups within the utilities area. And there you go. Notice the PMO topping on gas distribution, multi-utilities. We're looking at the same thing, kind of a topping PMO. Stochastics trending lower. So really, like I said, utilities may be a place to be, but still not looking that healthy. Conventional electricity does look pretty good, but I can see that's a rising wedge. And water, overbought PMO, still headed higher, overhead resistance on its way. Everything, I mean, I don't know about you, Dad, but I don't see even industry groups in here that I would be really excited about getting involved in. Possibly multi-utilities with the bounce off the 200.
Right, I agree.
Yeah. All right, well, let's get into those symbol requests. We have about 17 minutes, 18 minutes. That should give me long enough to lose my voice. So let's go for it.
Wolf, WOLF.
All right. Yes, and this one looking very sad in my opinion. This one was actually on my short sale list last week. Excuse me. See kind of this rounded top, failed to get above the 200. I think right now semiconductors are sort of an interesting place because we have heard Taiwan Semiconductors are putting in a new plant in Arizona. It's supposedly going to provide us all the chips that we're ever going to need in the US anyway, along with some of the others that have moved back into the US for, you know, tax purposes. They're getting some breaks, et cetera. But it's making that area a little bit, I'd be careful with it because this could be good news and we could end up seeing the semiconductors make their turn, or it could be very bad news on some levels as well. You know, you have a great supply and that usually means price is going to go down. And really, I think this one still doesn't look good. You've got a PMO that, yes, turned up last week, but is moving back down and looks to be on a sell signal once again. Stochastics are hinting that maybe we'll get a reversal here, but that PMO top beneath the signal line, a new PMO sell signal, I am leaning toward a breakdown here. You can see also the relative strength. So even if it's going to, you know, even if semiconductors are going to start showing relative strength, this one doesn't tend to travel in line, especially when the group is doing well. You can see back here, the group was improving, and yet Wolf had the big gap down and underperformed pretty much the whole way.
UNG.
Let's do it. I would love your opinion here, Dad, because I know this is one that we both follow. I'm going to actually put this on let's see if I can get this on a little bit bigger chart here. A little longer term. All right. I think a longer term chart is kind of a good look here for us to examine, and we'll get the thumbnail. All right. So big double top, right, on the on UNG, but we ended up with a failure of that pattern to execute. We ended up with a rally coming off of it, which is very bullish. But you can see that we ended up with a really bad 2 weeks ago. It was just terrible for UNG, making the move back up. But we have a filled black candlestick here. Notice there was one here. You can see there was one back here, over here, over here. Filled black candlesticks are bearish formations, okay? So we're getting the big move, but price is being pulled way down back below its open. And so the bears are starting to take a little bit of control here. So that's one of the things that could be a problem. I just lost, it's one of these days as far as computers go, my mouse just died. So I might have you pull up the charts and I can talk to them, and we'll see here, see if I can get it to to perk back up here. So anyway, what are your thoughts here on UNG while my little mouse gets itself a little more power?
Okay, well, it's I look at the rounded, I call it around the top between the beginning of this year. There's the double top. It's kind of around the top. It doesn't look good in spite of the sharp rally we've just noticed. Again, I this is not intuitive. I mean, intuitively, I say it's got to go higher because this is scarcity and then winter coming. But so far, none of that is coming to fruition. So
Right.
I believe the chart. Are you back in the business yet?
Yeah, I think my mouse is going to start to work here in just a moment. I would just say too that a lot of times with natural gas, and I think we've discussed this, when we're looking at the United States gas fund, it's a little different setup, right? Because we really don't export to Europe, I don't believe, ourselves. So they've got some problems because we can't really help with that. And so we really have to look at what's the supply in the US and how much are we using in the US as part of that. So sometimes it's going to go a little bit kind of against what we would think, but still US, obviously we have strong winters. So you would think that we'd end up with a move to the upside there out of it. All right, let's see if my mouse wants to cooperate now. No, okay, there it goes. Yeah, it looks like I have a little bit more time. All right, let's go with the next symbol.
PEP.
Pepsi. All right, still looking really rounded here. And notice that the PMO has had the sell signal, is turning down. This is the sort of chart I would look at. And if I owned it, I would probably be getting rid of it and booking some profit, because this one does look like it's ready to continue lower now. It's been consolidating, kind of a diamond shape here. That's kind of a little known pattern, the diamond pattern. And those are reversal patterns. So that also suggests that we're going to get some downside movement. Throw that onto a stochastics moving lower. I don't like the look of this. I don't think I'd even be holding it, to be honest, knowing what I know about the market overall. And we have to keep that in mind. There is a bearish bias in the short term and really leaking into the intermediate term as well. So, you need to have a really good excuse to be highly exposed to this market. And I'm 10%, but I have a 5% hedge as part of that 10%. So I'm not in here. I'm not planning on getting in here. And what I do have is hedged. So that should give you a little bit of a clue as to how I feel about the overall market. But Pepsi not looking good.
Yeah, I don't know what the reaction is going to be coming out of Wednesday with the Fed, but I won't believe anything that it does. It's tend to be short term. I think the long term we're still headed lower.
Yep.
Okay, how about MOH?
MOH, Molina Healthcare. Look at me knowing what all these symbols.
Something.
Tom used to be able to do this on Market Watchers Live, and I was just in awe, but now I know how. This one actually looks pretty good here. Healthcare providers, you can see that group has been outperforming right now. This is an outperformer within its group, consequently outperforming the market. PMO just moving into positive territory, stochastics above 80. Everything here looks great. Everything is telling me that this rising trend should continue. Let's see what your upside potential is right now. Would be about a little over 7% before you hit the next area of strong overhead resistance. So I think there's still some upside potential going on here. We didn't talk 5-minute charts. I'm going to look at one really quickly. What we look for on an entry is a positive PMO crossover with a positive RSI. This is a 5-minute candlestick chart. And you can see right now we're on a sell signal for the PMO, so not a good entry point. What we want to do is see this overbought PMO hopefully move back just a little bit more, then make the turn, and that would give you that better entry. If you're coming to the chart late, like I usually come to the chart late, I would not be a buyer here. that top beneath the signal line. I need to see that momentum shifting upward.
Okay, NFG.
That's one, natural fuel gas. Okay, gas distribution. We're talking utilities. This one looking pretty good. You can see the PMO. Let's move that to a bigger look. You can see the PMO has bottomed here, still beneath the zero line. So there's still a lot of weakness going on here. Stochastics turning and relative strength looking very good within a sector that we know is certainly outperforming, not healthy by any means, but certainly outperforming the others. This looks pretty good, but we do see overhead resistance at the 50 and 200-day EMAs. So I'd be really careful. I think on a pullback here, it might be an interesting entry. But again, your upside potential here to the next level of overhead resistance, and I'd say the gap resistance with this top, that gives you only about a 3.5% move to the upside, before you're going to hit that overhead resistance, probably see some problems. By that time, the market might be making the turn. So just think of it in terms of, half of that move has probably been made today and over the end of last week. So I don't know if I'd be entering here because there is this overhead resistance and that overhead resistance. So I think if you're going to be a really, really short-term trader, you could probably take advantage of a 3.5% move to the upside. But past that, I just don't know that you're going to see much more.
BCTX.
Riacell. Okay, biotechs, as you can see, have been having a good run against the S&P. Currently, at the end of the last week, they did start to fail a bit, but overall still in line with the market somewhat. This one's just been at a big old trading range. I don't care for stocks that way. Hasn't really, it's above its 50-day EMA at this moment, 586. It's at its 50-day EMA. I would definitely want some confirmation here of a breakout above the 50, but the PMO is so flat. And yeah, stochastics are turning back up, but the group is starting to fail a little bit. These stocks are super volatile. So if you have a strong stomach and you want to, dabble in the biotech space, certainly be my guest. But I would say that it's going to be very dangerous right now. And while you'll probably see some nice upside from some of these companies, you're going to see some dastardly declines within the group as well. So if you're ready to chance that you're going to get one that's going to have the big move up, like I said, you could do that. This has a bullish engulfing, does look like it's going to break out. I mean, we're just going by the technicals here. PMO is technically rising. Let's look real closely. Yes, it's starting to accelerate higher. This tells me that we're going to get a breakout on this chart. But again, overhead resistance, not bad, maybe 6.5% before you're going to have to, in the 200-day EMA here as well. So things are going to get sticky here right about the time the market's probably ready to just really tank. So be careful.
SIJ. That is from Dan, a new subscriber, and he wants to know, is a reverse head and shoulder forming? If so, what would be confirmation?
Okay. Reverse head and shoulders. Yeah, I can see that.
Something developing there, yeah.
Yeah, I can see a left shoulder head. Don't know that we have the right shoulder just yet. So there's a lot of speculation going on here because, these patterns aren't patterns until they actually confirm, which means in this case, we'd get a move above that kind of rising neckline that we're going to get right about here. So yes, it's a reverse head and shoulders, but 20 days holding is overhead resistance. It certainly gives the chart a little better look considering the RSI is negative. This is the ultra short for industrials.
That's one of those ultra short ETFs.
Yeah. So
it's, that's again, when you get into those leverage things, it's
yeah.
Anyway, I become speechless sometime with those
Yes. So as far as being a hedge, I could certainly see this. One of the ones I've been talking about, one that I own, not that you should go buy it just because I own it, but there's an inverse of the energy sector. And I think the energy sector looks especially weak right now. Certainly if oil makes the turn, we'll want to get out of that hedge. But if you're going to hedge, to me, hedging against something that looks even more bearish than industrials might be better served. But certainly, as far as hedges go, this isn't bad. We should see a breakout here. But I don't know if I think that the energy sector looks a lot more negative than the industrials. So just something to think about. IBM. 2 more minutes, so we'll just get through as many as possible here. Looks like it could be a flag, but more so it looks like a topping formation. Kind of a symmetrical triangle though, and so it could break to the upside, but the PMO is saying no way. Definitely don't want to be in it. If I own this, the PMO is telling me time to sell. You can hang out a little longer because the relative strength isn't fading completely. But the internal strength is definitely fading. As you can see, those stochastics moving lower. It's not particularly overbought or oversold. Computer services, this one looks like, let me book my profit. That's how I'd look at it. Now, of course, I say that and it'll break out tomorrow.
Okay, TT, got 1 minute.
The ultra short treasury.
2 T's. TT.
Got it. Train, building materials, industrials, another kind of rounded top look. Still holding support, but again, look at these PMOs. I guess the one good thing is that we're getting these sell signals and prices and completely dropping out of the sky here. But still, knowing overall that the market is weak and likely to get weaker, the breakdown is more likely than the breakout here. So again, another opportunity possibly to book some profit. If you want to stick it out, maybe set your stop right here below these in this support zone here as a possibility, or over here. But I'd want to stop if nothing else. I'd consider booking profits. Like I said, I think too many of these PMOs are turning down. Why take a chance? You can always pop back in later.
Okay, it's
10 o'clock.
10 o'clock. Did we get on time? I forgot.
Yeah, well, we started just a little late because of the issues, but I think we still are going to need to end. For those of you who are here, we do want to let you know that right now I still am running my super secret sale. If you buy a month of DecisionPoint, any of our products, I will be adding manually an extra month to your subscription. We're going to be raising rates in January, so you're going to get a separate mailing regarding that. But if you want to get in, time to get in at these low prices, you'll lock them in. Current subscribers are grandfathered, but go ahead and give us a try. And over at decisionpoint.com, and this is the good time to do it. Plus, like I said, if you do decide you like it, you'll be locked in at those lower prices. So go on over to decisionpoint.com. That's all we've got today for the Decision Point Trading Room. And with that, good luck and good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.